Well, welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Dave Dubeau. Dave has been an entrepreneur since 1993. That seems like such a long time ago. And he's been a real estate investor since 2001. He has done so many deals ranging from the creative no money down transactions, rent to owns, and recently more multi-family kind of properties and investment. He's an author of 7 books. He's been teaching people, training people. He's also shared the stage with Robert Kiyosaki of Rich Dad, Poor Dad, obviously, and also some of the guys from Shark Tank, like Robert Herjavec. I don't know how to pronounce his name, and then George Foreman and others. So it's great. It's great to have you here, Dave. Welcome to the show.
Thanks for having me, Eric. It's a pleasure.
So you've been pretty busy. What brought you into this? So you were an entrepreneur, but then after in 2001, you kind of you focused more on the real estate.
Yeah.
Maybe you can kind of tell us a little bit about kind of like your journey before as an entrepreneur and why you decided to kind of like consolidate or focus on real estate.
Yeah. So we're both from small towns in Canada. I don't know how small your town was, Eric, but mine had 800 people in it.
Okay, you win. Mine was like 25,000 people.
Well, that's a big city where I come from, man. So in British Columbia,
hospital.
Yeah, there you go. And so I grew up there, went to university at UBC, had a lot of fun in university, did not get very good grades, graduated with a BA in psychology back in 1990. Do you know what BA stands for?
I'm afraid to ask. I'll have to beep you.
Yeah, basically asinine degree in psychology. That's what it was. So with my grade point average and a Bachelor of Arts, nobody was pounding down my doors with great job offers. So I decided to go see a bit of the world. So I started traveling through Mexico and Central America, learned Spanish, ended up down in a little place called San Jose, Costa Rica. And I fell in love with the country, fell in love with the people. I fell in love with one specific person and decided, you know what? Hey, I think I was 23, 24 years old, had about $1,000 burning a hole in my pocket, was clueless, had no business background. I said, why don't I start a business in Costa Rica? How tough can it be? So Eric, I was a Canadian wetback working illegally in Latin America. Isn't that kind of poetic?
Wow. That's right. How did they treat you over there?
I started a language training company.
Oh, nice.
So we would teach English to corporations, send teachers out to give classes at places like Pfizer and Bayer and Intel and different transnational, international companies that. So got married, had kids, had a pretty good lifestyle down there, had a good business, lived there for 10 years. And then in 2003, my wife, my ex-wife, and I decided, hey, let's pack everything up. Let's pack the kids up. My daughter Amy was getting towards school age, and let's move to Canada. Now, my wife was Costa Rican. She wasn't from Canada originally. And people always go, especially Canadians, Dave, what were you thinking, man? There you were living in tropical paradise, living a good life, because, down there, it's fairly easy to have, even with a middle-class lifestyle, you can have live-in maids and gardeners and gated communities, all this kind of stuff. Why would you move from that back to the frozen hinterlands of Canada? And I always say, well, you don't quite realize how good we've got it in North America until you leave for a while, until you live somewhere else for a while. So as wonderful as Costa Rica is and was, being a pasty-faced white person, whether you have money or not, if you're living in Latin America, people assume that you do. There's a bit of a target on your back and on your family, right? So things like getting kidnapped and held for ransom don't happen very often, but they do happen. In fact, I know 2 people that got kidnapped down there. So and Costa Rica is pretty darn safe. So where I live in Canada, which is a small city called Kamloops, never happens. Never have to worry about that. So we decided to transplant ourselves, move back to Canada. But then I had to start all over again, Eric. I hadn't been able to sell my business in Costa Rica. I've been out of the country so long. I didn't have bad credit. I had no credit.
Yeah.
I had been self-employed for a long time, and with a basically asinine degree in psychology, I wasn't really employable.
Yeah.
Unless it was McDonald's or something like that. So I had to figure out what I was going to do. Plus, my now ex-wife was kind of persnickety. So we went from living a pretty good lifestyle to living in a crappy rental townhouse on the wrong side of the tracks. Wow. So I was under a lot of pressure to figure out what I was going to do. And I don't know about you. Do you remember those late night infomercials?
Oh, yeah.
Yeah. You too can get rich in real estate with little or no money down.
That's right.
I saw one of those. I said, perfect. That's what I got. Little or no money. No
closer to no money.
Yeah. So just like you did back in the day, Eric, and you got into creative stuff. Mind you, you were way smarter. You got into a big deal creatively. I took this course, and I think at the time it was a bunch of binders and maybe a VHS cassette or two and all that kind of stuff. And it showed me how to find motivated sellers of single family homes. Mm-hmm. So I went to work there, and in the small city that I live in, I managed to do 18 deals in 18 months, creative with very low money, no money. It sounds impressive. None of them were 8 plexes. All right. None of them were 8-unit apartment buildings. Yeah. We had a couple of nice houses, but we had a whole bunch of crappy little mobile homes and things like that as well. But I got good at finding motivated sellers and doing creative type deals and that sort of thing. So that was my first foray into real estate investing.
And you would wholesale these deals, or you would?
Some of my wholesaled, some of them I do sandwich leases on. Others were basically options. Others were, buying a property for $1 and then turning around. So there's all sorts of these different. So basically, all the stuff the American guru was telling me to do, I figured out a way to do in Canada. And it's all pretty much the same thing, right? Yeah. Slightly different language. That's all. But it was okay. It was good experience. And during that time, I kind of caught the eye and connected with an up and coming Canadian real estate guru, kind of the Canadian version of Robert Kiyosaki at the time. In fact, this guy worked very closely with Robert Kiyosaki and that sort of thing. So he saw what I was doing with real estate. He saw what I had a background in marketing. I was pretty good at marketing. So I started working with him, took some time off from real estate investing, helped him blow up his company and grow it very quickly. And that's when I started teaching and training and co-authoring a few books and stuff like that. I took some time off from active investing and then jumped back in 2010 and started doing a different strategy that actually involved coming up with some cash for down payments, right? So that was new to me, this whole money thing, actually using money for deals. And by that time, I had a decent income and I had some good credit. So I was able to self-finance my first couple of deals. And I'd always heard, just find a good deal and the money will find you. Have you ever heard that expression?
Oh, yeah. All the time. Yeah.
So I self-financed my first couple, ran out of cash, ran out of credit. And of course, that's when a perfect deal landed in my lap. The only thing I was missing at the time was about $80,000 for a down payment. But I'd heard, hey, find the deal, the money will find you. But I knew I had to do something. So I'd also heard, hey, if you need to raise money, pick up the phone. Let's see if you can fill in the blanks here, Eric. Pick up the phone and dial for dollars. Yes. All right. So I'd never done that. Didn't sound like much fun, but I thought, hey, I'll give it a try. I think around that time, The Wolf of Wall Street came out in the movie. It looked like fun, So I tried it. Called somebody up. No thanks, Dave. Called somebody else up. Rejected. Eric, I have a fragile ego. My poor fragile ego cannot handle that much rejection. So I did about a dozen of those calls, got turned down, said, screw this. I hate cold calling. Yeah. So I also heard, hey, if you need to raise money, turn every conversation into a real estate conversation. Have you heard that advice before?
No, I didn't. No.
Well, don't listen to it.
For me, like it naturally turns into that, or
it's okay if it's some natural, but if you're doing an elevator pitch or a 30-second commercial or the networky thing, it's really just weird. And it was just weird. And I went to the local BNI, Chamber of Commerce, Toastmasters, wherever they let me in the door. schmoozed up a storm and raised zero capital.
Yeah.
And the reason was, 2020 hindsight, is because I was desperate, and that desperation was oozing out of every pore in my body. All right.
Yeah.
So by this time, it was a single family home. So you only have like 10 days to remove subjects on a deal. It wasn't that hot of a market, but even so, you didn't have all the time in the world. So I had to get a 1-week extension. And that's when I came up with a brilliant idea, Eric. I said to myself, Dave, this is such a good deal. If enough people see it, it's going to sell itself. So I put together a little PDF, and I put together a list of a couple of hundred people that I knew, and I spammed them all the deal by email.
Yeah.
That was the first thing that showed any signs of life. I started getting some replies back, and I went, oh,
Yeah.
Thank goodness, because I was running out of time. Thank goodness. I was so happy until I started reading the replies. And Eric, basically, they all said, hey, Dave, dude, I haven't heard from you in forever. And here you are, hitting me up for cash for a deal. Take a hike.
Oh, we'll edit that later.
Oh, sorry. That was pretty PG.
Yeah.
So bottom line, Eric, this
Yeah.
was the deal I was doing was what's called a client first rent to own deal. So basically I'd found a tenant buyer. They'd paid me $10,000. I'd gone out and looked at a few different houses with them, got one they liked under contract. And so that's where I was at.
Mm-hmm.
So bottom line, I had to collapse that deal. I ticked off my tenant buyer big time, had to give them their 10 grand back, obviously. Ticked off the seller because I tied up their property for almost 3 weeks. Ticked off the realtor big time. Ticked off just major egg on my face in a pretty small town. And after the smoke cleared and I licked my wounds, I said, you know what? That sucked. There's got to be a better way to raise money than chasing after it. So I decided, hey, why don't I apply a little bit about what I know about marketing to this whole raising capital thing? So I did. I came up with what I call my 5-step money partner formula. It worked really well for me for single family homes. And I transitioned into multifamily, worked really well for that. I had people starting to ask me about it. So I started working with clients and teaching people about it. Mm-hmm. And at this point, our clients and our students cumulatively have raised well over $300 million for their deals.
Wow.
Following this process. So it works pretty well.
Yeah. I mean, that's so true. I mean, in essence, it's true. I mean, if you have a good deal, you should be able to find an investor that's going to invest with it. But there's a couple of things though. You have to have kind of like, as you mentioned, right? You kind of have to have the relationship already in place that's based on something else than asking for money.
Yeah.
And you have to know how to communicate the deal, to that audience. And you have to build a network first. You have to kind of like say, hey, this is what I'm doing. I'm looking at real estate deals and stuff like that. And do you know, and really ask for help in terms of, hey, do you know anybody that might have this, or do you know anybody that have this, and really build a relationship on something else before actually showing a deal to somebody, and they say, oh, this is you should invest, give me your money. And they go,
why didn't you tell me this all those years ago?
I didn't know you, Dave. If you would have called earlier, I would have helped you. I would have asked my mentor at the time and said,
there you go. So
but that's true.
So I changed kind of my philosophy. I decided, you know what, why don't I figure out a way to get investors lined up first?
Yeah, exactly.
And then go find the deals. Because then you could go in with confidence, you go in with security, you can go in with your mojo because you've got the cash to back you up.
Yeah. And in your book, the money partner formula, I think this is great. I mean, this is what you're teaching people, the reader, is kind of like how to build that network first. And you go into great details and great tips on building that network and building that relationship. And you had like the five steps for building that.
There we go.
Oh yeah, right there. 5-step money partner formula. There we go. So why don't you walk us through these steps? Step 1.
Sure. So we'll go through this, big picture, and then if your folks want a copy of the book, we'll get that to them as well.
Yeah, of course. Yeah.
So step number 1, Eric, is let's create a target group of prospective investors that we can focus on. Because a lot of people, when they start raising capital, they think anybody with a pulse and a checkbook could make a good investor. And they start, doing dumb stuff like I did back in the day and just talking to everybody and anybody. And these days, putting stuff all over social media, Facebook, and all this kind of stuff. And if you're trying to raise money from strangers, it's a tough road to go down, right? Because in order for somebody to invest 50, 75, 100 grand with you, chances are they're going to need to know you and like you and trust you with their money. Going out to strangers, they don't know you, they don't like you, and they certainly do not trust you with their money. So you're starting from scratch. Second big challenge is this pesky little thing that you guys in the States have called the Securities and Exchange Commission. We got our own version up here in Canada. And basically, both of them say it's illegal for us as mom and pop investors to raise capital from the general public unless you're licensed to do so, or unless you set up a certain corporate structure, get an offering memorandum or exemptions and all this kind of stuff, which tends to be very expensive and is usually for much bigger deals. Does that make sense? So we're actually, and caveat here, I'm not a lawyer, I'm not a securities expert, I'm just sharing my understanding, right? So
and here in the US, you can raise money from people that you have a prior existing relationship with.
So that's what we're getting.
But you cannot go and advertise and say, hey, send me your money and invest for that.
So instead of going after strangers, let's focus on those people that we do have that pre-existing relationship with, right? It just makes sense. Friends, family members, coworkers, business associates, people you know from church or civic organization, whatever. You know them, they know you, you've got a legitimate pre-existing relationship. So what I suggest you do is come up with a list of about 200 of these people, and then let's focus all of our attention on those folks. Does that make sense, Eric?
Yep.
Now, people are saying, I don't know 200 people, Dave.
Yeah.
I'm going to suggest you probably do.
I have no friends.
I think you probably do, Eric. Or your wife does anyhow. So what you do, you take your cell phone, you export all your contacts from your cell phone, get them into an Excel spreadsheet. Export all your contacts from your email contacts, get them into that Excel spreadsheet. Jump into your TikTok, export all of your contacts from your TikTok contacts, your Facebook contacts, whatever you're using for social media, get them out of there, get them all into a spreadsheet. And then chances are you're going to have several thousand people in there, but you don't have a real connection with all of those people. So quickly whittle down through it. And really you can do this very quickly and whittle it down to a couple of hundred people. That's much easier than thinking up 200 people.
Yeah.
So, okay, let's create that list. Second part is let's reconnect with these folks before we start talking business, right? Because my big mistake back in the day, I was smart that I created that list of a couple hundred people. I was stupid because I spammed them all with my deal right off the get-go. So here's what we do instead. You break the ice with them first. So you do what's called a warm-up campaign. And the good thing is you can automate this. You can do it by email. You can set everything up in a CRM or an email autoresponder. And then just, reconnect with these folks on more of a personal level first and set the stage for starting to talk about your real estate deal. So that's step number one of this 5-step process. Does that make sense, Eric?
Oh, that makes absolute sense. I think the part of the thing too with that is that people don't realize sometimes that they have a broader network than they imagined.
Exactly.
And in the end, it's all about the people. I mean, we talk a lot about buildings and numbers and stuff like that, but all these things happen because of people, because of relationship, and that's what you have. That is going to take you through everything. You'll be able to, you can do real estate, but then you go and do some other business, you open a restaurant or whatever, that follows you around. And this is what happened to us too. Like we had done different businesses, gourmet sauce company and all of that. And then people were always curious, what are the Martels doing now? And then, and that's how they said, hey, I want to invest with you. And I want to do that. So
at the end of the day, Eric, I don't know if you would agree with this, but I think somebody much smarter than me said this originally, that, the people aren't really investing in the building or the business or whatever it is. What they're investing in is you.
Yeah.
And whatever the investment is really just the collateral for that.
Yeah.
Does that make sense?
Exactly.
So you're right. It's all about the relationship.
Yeah.
So that's step number one. Step number two is now we got to be ready when somebody puts up their hand and says, hey, Eric, tell me about your real estate deal. We don't want to get caught like a deer in the headlight going, oh crap, now what, right? So a couple of important things here, Eric, really important. Number one, I think that the best way these days to explain your real estate deal is with a nice, simple, well laid out slideshow presentation, like a PowerPoint or a Keynote or Google Slides, whatever it is, right? Something that you can walk people through that A, is visually interesting for them, keeps them engaged, B, is simple to understand, and C, keeps you on track so you don't go off on too much of a tangent, right? Because here's the reality. And I say this with love and respect for you and for your followers. And here it is. We are real estate weirdos. Right? And I say that with love and respect. I am too, right? Because I don't know if you've ever had the experience of talking with a non-real estate person about real estate stuff. And if you start getting, especially if you get into jargon like IRRs and NOIs and cap rates and this kind of stuff, their eyes kind of glaze over, they zone out, they're kind of gone. Does that make sense?
Yep.
So we got to remember that. We're the real estate weirdos. They're not. So we got to keep it pretty simple for them. We got to keep it Reader's Digest level, right? So some of us with gray hair remember Reader's Digest. It was a little magazine written for grown-ups, but it was written at a 13-year-old reading level, right? Just to keep it easy to consume. Same idea with your presentation. So that's step number two. Create what we call your $1 million investor presentation or slide deck presentation. Practice it up a few times, get some practice runs under your belt, be ready to go with that. Step number three.
For a single family rental, we actually had like just a nice like one pager, picture of the property, description of the property, what we're planning to do with it, just one paragraph, and then the numbers, what the money would be used for, and what the return would be, and then that was that simple. And we don't guarantee anything.
No, don't guarantee anything. No guarantees, man. Yeah, exactly.
But the one pager was great because it was something that, you know, we would send that through email and it was very quick. For the big projects like the apartment buildings that we did, the apartment projects, that we did a slide deck for that to show everything.
Even for single family homes, a few slides I find help because, you know, especially depending on what you're doing with the property. I'm aware of up to 8 different profit centers in a real estate deal. So the average person doesn't understand that, but if you can explain that to them in a simple manner, it really makes their eyes light up and gets them excited. So it's just different strokes for different folks.
It depends on the investment, obviously, but I was just saying for us, like it was just a single page and it was pretty simple. If the deal is more complex, you can't do it on a single page.
Exactly. So that's step number 2. Have that $1 million investor presentation ready to go. Step number 3 is to kick things into gear with marketing, right? So Eric, you're an entrepreneur. You understand the importance of sales and marketing for every business. And as real estate entrepreneurs, we need to be in the marketing business as well, especially when it comes to finding deals and finding capital for those deals. So marketing, all sorts of different things. Having an investor-focused website is a good start. Doing different things like electronic newsletters, video logs, blog posts, etc. I recommend that you do your best to touch base or to drip edutaining content on your investor list up to once a week. That's kind of what we're shooting for, right? Once a week. And I said edutaining communication, right? Because remember, they are not real estate weirdos like us. They don't want to be overwhelmed with too much information. They don't want to learn every darn thing we've ever learned. They want to know that we know our stuff and they want to have the gist of it, right? Does that make sense? So edutaining communication with a clear call to action at the end of each thing. So again, people say, well, Dave, how are you getting investors reaching out to you, booking meetings with you, texting you, emailing you? Because I tell them to. I'm very, very explicit. Hey, if you'd like to find out more, click here. Let's book a call. Let's have a conversation. Does that make sense? So drip, drip, drip. Every single week, something's coming out. So that's step number 3 is create that marketing. And webinars are great for marketing as well. Really, really good. Step number 4 is be seen as a real estate authority. Now, here's the good news. You don't have to have a best-selling book like Eric. You don't have to have podcasts. You don't have to have the next purple book like Robert Kiyosaki. There's some simple ways that you can do this, because again, remember, we only really need to focus on being seen as an expert in the eyes of those 200 people that we've got on our list, right?
Yeah.
So different ways to do this: have sharp looking materials, make sure your website looks good, make sure you've got good looking business cards. If you're doing the slide deck, make sure it looks professional. Those are, some basic things. Some suggestions: when you're talking with people about investing with you, I recommend that you dress up a little bit. It doesn't have to be a 3-piece suit, but dress business casual. It's going to show the other person respect. It's going to get you some respect from them as well, right?
Yeah.
Speak knowledgeably about your primary real estate investing strategy and your primary market and why these are so great. Take a position of leadership when it comes to real estate investing with all of your communication with these folks. So again, we want to beat the drum about why real estate rocks and everything else sucks. It's pretty much what we're trying to do. Compare and contrast. Real estate's so much better than investing, than putting your money in the bank. Here's why. All right. Ding, 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 ding. So compare and contrast. So those are,
and I think to be an expert in an area, the more focused you are in an area, in a type of investment and stuff like that, the easier it is for you to be an expert and share that. And you don't have to be an expert at everything. You say, well, I don't know about mobile home parks. If you want to do that, like, you can talk to somebody else. This is what I specialize in. If you want me to, if you're interested in this kind of deal, this is the kind of return. And I've looked at this for the last X years. I know what the numbers are. I know what it should be. And I've done all my analysis. And this is why I'm so excited about these opportunities.
Yeah. Now, it doesn't mean that that's all you can ever do, or you can only focus
on that's right.
One
that's right.
But what I'm going to recommend is exactly what you said there, Eric. You want to be seen as a specialist, right? So all of your marketing, your website, everything that you're doing should be talking about one specific strategy and ideally one specific market. And then the goal of all this marketing, the goal of everything, is to get the investor meetings booked, have conversations with people, and get your investor ducks in a row. So you've got those investors lined up, you've got the capital ready. So when you've got a deal, instead of having to scramble for that capital, now you can just go and say, hey guys, I've got this available. First come, first serve, right? That's the kind of position that we want to be in. And then here's the good news. Let's say you've got a different kind of a deal, kind of a one-off deal. Well, then it's very easy to go to that small group and say, hey, you guys, I've got a deal here. It's not our normal kind of a deal, but I think you might be interested in it. Would you like to take a look? And then you just do a very simple little presentation about, say you normally do single family homes. Now you got a small multifamily. Well, now you talk about that specifically. Does that make sense?
Yeah, absolutely. And it works. I mean, you want to be kind of the expert. You want to show that you want to show that like you mentioned earlier, you're investing in that person. So you want to know that they're going to take care of it. They're grateful for the investment you're going to put in place. And the more knowledgeable you are about the opportunity and how to deliver and execute on the project, the better they're going to feel about it. They say, oh, I think you're great. I think that's a good way to start. I mean, both my kids were, they raised money on deals and stuff like that. And I think they both started like at 18 years old or 19 years old to raise some money. Nice. Imagine 18-year-old raising money from one of them. My son in Memphis raised money from a guy. I think he was a dentist or something like that. And
it's wonderful. We got one of our clients in Ontario. They had they have a teenage son. In fact, he was 15 at the time. But ever since he was 13, when they first started investing, he was very involved with them. And by the time he was 15, watching what they were doing, he went out and raised enough capital to buy his own 5-plex before he even had his driver's license.
Oh my God. Yeah, that's very impressive. But yeah, I mean, this is possible. And now with the social media and stuff like that, I mean, you can just be careful what you put out there, make sure that you are professional and you know what you're saying. But I mean, you have a lot of different channels where you can really share your experience and record video and publish it on different Facebook groups and all of that, and Instagram. And don't forget TikTok.
You got to be very, very careful with that, though, Eric. And again, I think social media is great for kind of casting the net
Yes.
to create new connections, right?
Yes.
So you want to, if you're going to do that, you want to really be educational. You really want to be showing people what you're doing, doing walkthroughs of the properties you're looking at, but don't be explicitly soliciting investors that way.
Yeah, no, that's right.
That's connection. Right.
Yeah, that's right. And I think that's right. Your book is more about really focused on these 200 connections that you have, and really laser focus.
And what we find is typically most of our clients we work with, they have between $1 and $2 million of capital within that group that they can access first. And for a lot of people, that's more than enough to keep them rolling for the first couple of years, and then through referrals and testimonials and warm introductions, they're able to grow their investor base that way.
Exactly. And then the next step is kind of like the last step. I don't know if you talked about that, but you kind of hinted at it. It's kind of like that snowball effect. So you have these groups, you have people that are investing, and now, how do you get that snowball effect to?
Well, I'm sure you've seen this in your own business, Eric, or different businesses. Once you've got a couple of happy investors on board, it's easier to get more of them because now you got proof of concept. Now you got to, you do things right. You've got raving fans. Yeah. So it's simple. You just ask for introductions and you get testimonials, ideally video testimonials. Video testimonials are fantastic. And you want to get warm introductions from these folks to their friends and their family members because they tend to hang out. They tend to know other people with money.
This is very good. This is very good advice. And it's absolutely true. I mean, you build your network, you really cater to your network and let them know what's going on. And then in the side, you kind of find a deal. Then you can bring the deal to the table when they are ready to listen. There's no point in talking to people who are not ready. So any other advice then for the people out there? I know that this works. You have seen some very creative, and you've done yourself some very creative deals. And then, so what are some of these kind of like these venues or these ways to kind of like, I don't have much money, I want to get this project. What is the easiest project that somebody can get into? And then, so they have the little network maybe of 200 individuals that maybe he can raise some money, they can raise some money from. But what's the easiest?
You're talking about somebody starting from scratch?
Exactly. So they have.
So I won't blow smoke up anybody's skirt and say, "Hey, it's super easy to raise money if you don't have a track record." It's not. Is it possible? It's possible. It's just not very easy. So, what I always recommend to people who are just getting started is, if at all possible, finance your first deal yourself. So use your own money or your own home equity or whatever it is for the down payment to do that deal and get some experience with some skin in the game, right? Because then you can go and you can talk to investors. And if the question comes up, well, Dave, why aren't you using your own money for this deal? Well, guess what? I would, except I've got my money already placed in another deal. That's why I'm making this available to investor partners. So self-finance your first deal if you can. If you can't do that, or if you don't have enough money to completely do that, then you can, potentially partner up with somebody else and perhaps be a joint venture partner for them. So find somebody who's actively doing what you want to be doing, partner up with them, you put in some capital, and in addition to getting some equity in the deal, you say, hey, I want to pay to play and also to learn. So you're not going to just be a passive investor in the deal. You're going to actively be involved in that deal, learning as much as you can from the person that's doing it. So that's another piece of advice there. If that doesn't work for you, if you don't have any money there, you could work for free. So again, find somebody that's doing what you want to do, offer to work for free for them in exchange for a little tiny sliver of equity in a deal, and bring value however that looks. If you're a handy kind of person, go swing the hammer or push the wheelbarrow, whatever that is involved there. If you're more of a marketing type person, help them with the marketing, or go find deals for whatever it is, whatever value you can bring to the table, do that. And again, in exchange for experience and learning, and the legitimacy of being able to say to investors down the road, hey, yes, I've got experience. Here's a deal that I've been involved in. You don't say it's your deal. You say it's a deal I'm a partner in, and you can legitimately say that. So you get some experience that way. If you can't do that, then maybe for your first deal, if you are able to bring an investor on board, maybe it's a close friend or a family member, I would recommend that you be extra generous with that person, right? So if they're putting in all the money and they're taking a kind of a leap of faith with you because you don't have much of a track record, then give them the lion's share of the profits, right? You're going to do all the work. They're going to put in them all the money. But instead of maybe doing a 50-50 split on a single family home, for example, maybe you skew it much more in their favor. 75% towards them, 25% for you after they get paid out first, or 80-20, or whatever that looks like. Because here's what you want to do. You want to get at least one successful deal under your belt. That's proof of concept. That's going to give you confidence, and that's going to give other people confidence in investing with you. Is that helpful, Eric?
Absolutely. That's very good advice. Because the next thing is going to be building your track record. So, and then get started
somewhere.
That's right. So at the beginning, be overly generous with your investor. Make sure it's, it delivers under promise, over deliver, and then, keep doing it. And then after that, you can always adjust it. At the beginning, maybe you gave 75% to the investors, but as your track record builds, then you can definitely go and do 50-50.
Good piece of advice there. Make sure that your investor understands that up front, because here's what's going to happen. Once you do that first deal with that investor, they get a good return, guess where they're going to want to reinvest? With you, right? But you have to have that conversation up front and say, hey, the first deal, 75-25. And if you're happy with that, great, let's move ahead. But moving ahead, it's going to be 50-50, right? But you have to have that conversation up front. Otherwise, it's kind of a
kind of say, this is the list price, and then I'm giving you a discount here.
But you're just be perfect.
Like, that's right.
I hear so many people say, fake it till you make it. I hate that advice, right? Because here's the thing, especially when it comes to raising capital, we're in the trust business. They need to know you, like you, and trust you with their money. As soon as they catch a whiff of BS coming from your direction, that kills the trust forever, and they're never going to invest with you. So do not fake it till you make it. Be perfectly you don't need to be perfectly transparent with people. Say, hey, I'm just getting started. That's why I'm willing to give you the lion's share of the profits on this deal, just to get one under my belt.
Yeah, exactly. No, excellent advice. I really like it. So Dave, where can they get this, your book, Money Partner Formula, so they can read in all the details, kind of all the tricks? I mean, you gave us a lot of information here, but there's way more information in the book, more details, detailed strategies and stuff like that. So where can they get the book?
Well, all things Money Partner Formula can be found at moneypartnerformula.com. Moneypartnerformula.com. There you can there's a tab where you can get the book. I'll trade it to you for your name and your email address. Send you a PDF copy of that. That'll get you into my world. We do one-day virtual workshops. We spend 8 solid hours going through this process, step by step by step. We do those every month or two. You can find out about that at the website as well. If you want to have a one-on-one conversation, you can book a call there as well. It's all at moneypartnerformula.com.
Oh, that's great. Dave, anything you want to add? Any famous last words?
Famous last words are, what? Just as we were mentioning earlier on, Eric, it's all about taking action, right? Just like you did way back when you're 18 years old, you did your first deal. You didn't really know what the heck you're doing, but you had some training, you had a mentor, you had somebody in your corner. You guys, don't sit on the sidelines, get involved. It's never too late. I've seen people get started in their 70s in real estate investing and make a great go of it. I've seen that kid started 15. So you're never too young or too old. Take some action. Yeah.
And building, I want to reiterate too, that building that network is very important. They used to say, about education. Education is so important and stuff like that. I would say that the business network and that network of partners, of money partners, is more important than education. You don't need the PhD. You need to have solid partners to launch your deals and help you facilitate many of the deals that you're planning to do in the future.
I agree with you. Definitely.
Dave, thank you very much. Thank you for your time and
My
your
pleasure.
knowledge and sharing all of that with us. And again, so if you want to, you can go to Money Partner Formula and then get all that, read that book, and participate with Dave into these workshops, and start building your money partner network.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.